Hello traders, Gary Wagner here. Just about 12:20 in Honolulu, 6:20 in New York. It is Friday, 22nd day of February 2019, and this is the Daily Report for Gold and Silver, our weekend review. And what an interesting week we have seen, especially with yesterday's sell-off. We did get a recovery today. First, as an editor's note, I do wish to thank all those that attended our live event yesterday and hope that you got something beneficial out of it. And it was something that I'm hoping to continue. So please, if you were at the event and you have criticism or comments, please email me at gary@thegoldforecast.com so that we can weigh how often this is a feature that you, as our subscriber, want to be a part of. First to gold, nice recovery, up $2.90 at $13.30.70. Silver also up about 0.5% today at $15.88.5. Platinum 2.3% higher, $8.45, so it's actually moving up quite nicely. But once again, the darling of the precious metals, $14.65.30, up $20 in palladium. And yes, it is getting very close to my target of $1,500. Now, the equities also sustained a nice rally today, 181-point gain in the Dow. Standard & Poor's gained about 0.6%, and then also the NASDAQ Composite did quite well on the day. So traders, interesting recovery today after yesterday's $20+ fall from grace after hitting $13.50, and that was on Wednesday. The market recouped ever so subtly, closing today about $3 higher at $1,330.70. Of course, yesterday we did pull profits. We got out roughly at $13.30.16, and we got in at $13.16.20. So we made a decent profit, about $1,400 per contract. I'm very satisfied with that. But now the question is whether or not yesterday's move was a one-day wonder, or if there was enough of a shift of a fundamental event that would cause market sentiment to move from bullish to bearish. The fact of the matter is that the market has been in an overbought scenario really for the better part of mid last year and definitely all of this year, considering that this rally really began in August of last year, and the market was trading at an extremely interesting low right here at 1164. Because from that point, we started to see a series of price hikes, or spurts as I call them, followed by periods of congestion, followed by another price spike, followed by another stair step. Now, that all changed about mid-November, because after hitting these lows at around 1200, we had a dynamic rally, and the most dynamic rally of this year, and a very, very respectable rally for any year, in which we saw the market move roughly $150 from just under 1200 to just to 1350. So the fact that we would have some profit taking in this area is a very logical assumption. Now, my sense is, because the market was reacting to the Fed minutes of January, there was no real new fundamental data that came out of that. There were nuances and changes and subtleties, but nothing that startled the American public. And so for that reason, I am inclined to believe that this will either be A, shallow correction, or B, a one and done, meaning it sold off, it will begin to move higher again. In either case, whether this market continues to track lower, then my next number would be around 1312, 1308, as we talked about on the show yesterday, or if it finds support on the lows of today, which came in at around 1323. In either case, my sense is that once this is over, whether it's over now or a little bit lower to go, we are going to see gold take a stab and break above that historical barrier that has been so difficult to break through, and that, of course, is 1370. That being said, It's simply a matter of positioning ourselves properly and entering the market at the right time. And if we're correct about our assumption, we will make money on the trade. Based upon the information available to me today, it seems more likely that we're looking at either a shallow correction or a one-day wonder, a one and done. That being said, let's look to see how the market opens up. Next week, we have gone into the weekend flat with no active trades and are awaiting the proper positioning to enter ourselves from the long side. I think that that is still the way to look at this market, because what we have to remember is we want to look at our moving averages to determine really the big picture. And let's go ahead and put that up, because what is so important about the moving averages is it gives us a sense for intermediate trend, long trend, as well as short trend. And when we look at current market action, we are above the 50, the 200-day, and the 100-day moving average. In fact, we have just seen the 100 cross above the 200, so we're actually in proper alignment. And as long as we are above at least the 50-day moving average, we simply put want to look for dips to buy and then cover. And that is the best way to play that game. So based upon that, next week we will be looking to position ourselves from the long side once we have correct confirmation that what we saw yesterday was a short-term event. Lastly, traders, I do want to take a quick look at palladium. Palladium hit an all-time record high 2 days ago. It sold back off, but if you take a look at today's action, we're getting an engulfing bullish. Actually, in Japanese candlestick patterns, this can be called a last engulfing bullish. In other words, when you have an engulfing bullish after an extended uptrend, it's called a last engulfing bullish, meaning that it's actually a bearish signal. But I'm not going to take that in this particular instance. I don't think we're going to see the market go lower. Rather, I think we're going to take out 1,500. That's the number I've been calling for over the last month, and I feel comfortable with that evaluation. This has been Gary Wagner, wishing you as always good trading. We will talk to you next week for the next daily update and review. Have a great weekend. Bye-bye.